Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a massive push to the upside to that 42,394, basically 42.4 mark, where we came up to this level in the past on the April 21st drop down during that whole April Fool's event of a drop down here and a retrace continuation idea during that whole Gemini Luna liquidation event, which led to the whole FTX collapse down here. So yeah, we're back above this range and these levels at this 42k zone. Pretty interesting. So how can we hold it? Do we retrace from here? What is going on with the liquidity? Let's find out. We're also at the 786 of this diagonal pitch fan, which we've seen reactions off of in the past. So do we get another reaction or bump up to that 886 level of this diagonal pitch fan we've had price in since January? Let's go ahead and check out high block. What is high block? Well, people, lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. And yeah, let's go see what the 1 minute time frame dragged in. Just every short that enters getting gobbled up without hesitation as they push the extremes of the liquidity zones. All of the $152 million pools that opened up here at 40k just got gobbled up without question.
Fatality.
And yeah, the 100xers that are still open up in the Johnny come latelys at the end of the pump here, the 100xers of 173 million did end up getting paid if they paid themselves, but the ones late, the breakout traders here that got $82 million at that 41k region, basically got spiked up and grabbed, and they continued even further to their 50x brethren on the longs.
Fatality.
And then now, after clearing the range of these shorts up at 42.35 and coming back down into some of these $100 million pool longs, do we continue from here? We are currently imbalanced on the 1 minute time frame to the tune of $21.84 billion in long liquidity. So coming back down and retracing into some of this seems like the fair play to assume here. They might be doing some fake outs to scare the shorts in a manner before they take it down to here, but basically 40,532 is a interesting pool over here. 40,532. So let's go ahead and throw that onto the charts. I believe we already have some pools there. Sorry, this needs to be a little bit like that so I can see the T to know the difference. 40,532 would be basically in there, inside of this vector candle. We also laid out a pool from yesterday. Those are some other characters down in here at that region. I wouldn't be surprised if we head down in that region at some point. I was telling somebody in a free Discord, like, he was talking about entering a short, and I said generally I wait for confirmation on the power of threes. We've gone over it multiple times on the channel, but I'll go over that in a bit. So basically the 7-day time frame, tapping into the short liquidity here. You have a little bit more up in that 42,550 region, but for the most part there is more to the downside. Do they start to retrace into that or engineer some more to offload some positions? In the monthly time frame, you still have some small pools, not in the double-digit range, but up in that 43.5 region. If you just look at what's being induced and underwater, there are some small pools still underwater up to that 45K range, if that is their objective, as APV suggested with the order block. There is some liquidity to justify that move. Not that much though. No, there's a few double digits up at 44.4 and 43.6 and 43.4. But for the most part, they cleared the liquidity pools we were talking about yesterday at 41.4 was where we were frugally estimating it would go. It went up to 42.4. But the liquidity tapers at that 42.8 region, so I would imagine they have to thicken it up a bit by retracing down into some of these longs on the 100x schemata. They have this still large amount of liquidity below that needs to eventually come back and reclaim. On the 6-month time frame, having 24 billion up at 43.5, but other than that, pretty threadbare. If you go to the 2-year, 2-year has 80 billion up at 43.6, and that's about it for that. If we go back to the monthly and head into the charts, we're going to have to look at some Fibonacci levels. Basically, the monthly has this narrative of coming up to this region on these small pools. So it aligns with what APV was saying. Just the non-double digit nature of this could be engineered thicker. But there's no nearby liquidity as it surged up here, so it caught everyone by storm. All right, so let's go into the charts, shall we? So here on the 12-hour time frame, we got a blue vector, which is the stopping volume. We went over yesterday about that. Let's go ahead and start our descent through the time frames and go through the momentum. First and foremost, we can look at where we hit on the Fibonacci. This is why we use these trend-based fibs, because this impulse retrace idea here, from that impulse to this retrace, contained all this math about coming up to the 1618 at 42.382, and sure enough, it came up to that, nearly to the dollar. So very, very fascinating how these things play out. I've seen it on, and then they meander around that 786 region, eventually reclaim the 706, get the permission to go higher, and boom. And yeah, we'll just leave that up for a little bit longer because it could go all the way up to these zones, so we want to be ready for that. So let's throw on the Momo and see what's up. Link in the description for more about what this little thing is, momentummaster.info for more. Scroll down the features, toggle at your leisure, and read about each of the components like the trend cloud, the baselines, the stochastic array. Speaking of stochastic array, we did get a nuke that locked in on the Bitcoin for the 6-hour. I want to see if it held on other time frames. All right, so we got the cross up of the daily time frame here from Saturday, and basically this cross up of the baseline and negation of the flash for the cross down event of the 3-day baseline we were talking about. See, these cross down events need to close for it to be genuine. So we were waiting for that cross down event, which did not occur, and so that is the sign to continue until the cross down event decides to lock in. So if we go to the weekly time frame, as of Monday, we've had a cross-up event from Monday, October 23rd, and these baselines for the weekly are still mighty strong. It's been 1, 2, 3, 4, 5, 6, 7, 8 weeks of upside, 2 months of upside here since October 16th, and essentially from September we've been trending up off of this cloud on the weekly time frame. This is why we used the cloud-based idea. You can even see how when we wicked down to the cloud here on the weekly at 19K, which was a 618 of here, This was also a continuation signal to go long, and also meeting with resistance on the adaptive. All of these components are things that we go over on a fractal-like nature, and the kiss to the cloud here that continued us higher, and we had that rocket ship for you as well. So let's go into the daily, well, actually the 3-day. We'll see when the 3-day is closing. Let's keep our eyes on the prize here. 3-day closing in 23 hours. So how does this 3-day close its mark? We watched it hold this adaptive, which it had butt its head against up in March of 2022 and failed, and we held it, and we got a buyback wick off of that, which possibly insinuated higher prices, and it sure did come to fruition. So does this 3-day close bullishly and strong, or does it give back some of it in a wick-like format? It'll be interesting to see. The baselines are extended though on the 3-day. If we look at the oscillator for the 3-day really quick, you got the Williams in an overbought status that could be coming down at some point. Watch for the alarm cross as we did back here, and it dropped, and the alarm cross here, which it dropped after the cross down event. So we'll see that as it closes in a day's time. It is Tuesday, December 5th, 2023. So the daily time frame maxed out here on the stochastic RSI, the leading MACD pushing to the upside. You got some nice volume entering on that candle. This could be people offloading their positions onto retail, so I would be surprised if it just held the range and allowed the retail to FOMO in while they offload and distribute their overpriced premium levels to them. We will see in the coming days. So the money flow coming above the RSI ever so slightly, coming into that overbought region on the daily. Looking at the cloud has gotten a little bit of a boost up to that 2 o'clock level, coming like this. So we are getting a little bit more volume entering, and the super trend coming up higher to match the ATR. If we go into the 22-hour time frame, the 22-hour is also crossed up here with the 22-hour cloud bounce inversion here, which was also the 12-hour giving you the entry. It could have done so, but it was meandering around on the oscillators, not being a coherent signal. Looking at the 12-hour is more coherent. We were talking about an inversion play off the cloud. What does that mean? We'll go to trend cloud. It says thin clouds represent weakness or consolidation points. Keep in mind when the cloud thins, a potential expansion or reversal is in. So you can have these thinning points be areas to go up or down. Here is an inversion play where it went to that cloud, which was thinning, and maintained it and bounced up. And so that was the inversion point here. An inversion of the cloud. So we were looking at if it closed with conviction beneath it, then you would see something like this, and then a retest of that, and then continuation further down. But it did not close any candles beneath that, so you would have looked at that as an inversion play. Super trend baselines in your favor, super trend and trend cloud in your favor, and bada bing bada boom to the upside. Where do we stand now on the 12-hour? 12-hour getting that blue vector stopping volume candle to that 42,382 region. Do we hold it? Do we maintain? I'd be looking for 3 hits to the high. What does that mean? The power of 3s. We'll go into the lower time frame and find that out. Williams also overbought on the 12-hour and the 6-hour here. 12-hour possibly flashing a cross down event of the Williams with that alarming signal. Volume tapering off here as we drift up. That is a sign of potential fatigue. You had the nuke lock in on the 6-hour for that elasticity stretch of all the time frames here. So waiting to see how this operates on the 3 hits to the high idea. All right, going to the 4-hour. 4-hour is also overbought, most likely coming down here Williams giving the first alarm signal of the cross down. The baseline starting to fail on some of the price action here. Can you accelerate down and create some sell-off here, resetting the 4 hour slightly more? The hourly. So the hourly time frame got some bearish divergence as we were coming up to this point here. You see the equal highs and lower highs on the RSI, and then we spiked up to that region and we're starting to possibly make it lower. One thing to note here is the money flow coming beneath the RSI. On a rare case, if it's a rare sell-off case, the RSI will make its journey down to the money flow. But for the most part, the money flow does give a surge back up. So this is potentially showing that the disparity between the money flow and the RSI will lead to a curveball to the upside at this time. If we go to the 15-minute, we can see if that's going to be true or not. So the 15-minute is resetting here in a manner. You had these nukes flashing as we were coming up into the exhausted region. We are holding the super trend, so you would not be looking to short until we potentially break the super trend levels and put in those power of threes. So we've hit the high once and twice, and then you wait to see what the third reaction to this area is. We're basically up in this region at 42.1. So in this block here, how do you react to this? Is this going to be a shoulder, head, and possible shoulder idea? So on the 15-minute, we are holding the super trend, holding the cloud. 15-minute is reset in a manner here, still could come lower. I'm not the one to buy at premium prices, but if you're watching your trade in profit to see if you should hold on and where to keep your stops, one thing to do with that is to use a what? I don't know what that is, but okay. One thing to see what that is the trailing stop loss within Momentum Master A, and it will tell you where you can put your stops in profit. 41.432. If we maintain this range, then likely to go higher again. So the 15-minute rather, the 15-minute looking to hold this super trend as of this moment in time, and possibly going up to a third hit potential. And what does that mean? Do we come up into these regions and react off of these zones or not? So somebody trying to expect a V-shape, you can get some reactions and V-shaped reactions off of these, but the higher probability is to wait for a third possible hit and watching the reaction to that hit. Okay, so coming back into the liquidity here, we have some large pools down below at this point. Once again, $22.84 billion, billion dollars. And then we have the higher time frame narrative possibly coming up to these pools up above on the monthly. And looking at, we'll come back to this in a second, just looking to see what the 15-minute is giving with the hourly. So the hourly could come up into a region here. Most likely you get some sort of fatigue and come back down. You'd have to see what is a gap in here. There is a gap in this region here that we could come into. If you don't know what a fair value gap is, there are these tools that do it for you. Fractal break imbalance, fair value gap, liquidity void. You can turn it on. It'll most likely be accurate what you're seeing. And yeah, so this liquidity void indicator you can use for free. So possibly coming up to here and watching for a reaction using the power of threes theory in conjunction with some fair value gap / bearish order block ideas, and seeing how this comes lower. But as of this moment, trying to see if it's going to induce some more longs, go up to these potential pools up here. If we zoom in, 21 million up at 42,129, 25 million 100x at 42,205. So coming up to these potentially, but overall fatigue and trap traders up here down at the 41.5 region. So possibly fatiguing down into that 41.5 zone at some point soon. Let's go see what the chat is, and then we'll do a deeper analysis of some other stuff for you. What's going on? Yo, what's up, DK? Connor, best and most underrated YouTubers on the platform. I appreciate that. Major correction is inbound. I mean, we went over yesterday how September 7th is 2021 is a interesting thing to go back to. As everyone was bullish, like super bullish, I was seeing the head and shoulders similar to what I was just pointing out a moment ago with bearish divergence over here. So we're going to go back in time, a flashback in time when Ecuador adopted Bitcoin as a currency and everyone was ultra bullish as we were going to 53K, bear market's over. It was just a correction, everyone's saying. And then we go to here. Okay. And then guess what? On the 6-hour time frame, we had another nuke print here. And nukes don't necessarily mean it's coming just yet. You could have a extended M, but eventually, if you even look at it as a swing, the nukes are meant to be swung, as are the rocket ships. And so you have to have a relatively frugal stop loss in mind and not use such large leverage. And yeah, you can look at that play out most times. So anyway, this is September 7th, 3 in the morning my time, Asia. And we're going to go back in time and see what possibly could happen in bullish scenarios where everyone's getting their head spun to the upside. Okay, so we were looking at this kind of idea here, and I remember seeing this 3 hits to the high idea. I was seeing the shoulder, head, and shoulder idea. And I remember getting in on the shoulder right there. That's where I got in right there. This was before I even had the indicator suite that I'm using today. So I was looking at bearish divergence. There was bearish divergence. I didn't even have this auto divergence that I have on Momentum Master with the crystal divergence here. But I was seeing bearish divergence on the hourly, but it was also on the daily. Because we were getting kind of equal, like sea level divergence. We were getting higher, but the RSI was kind of getting lower. So I was looking at this as a stop hunt. And yeah, if we go to like even other time frames, that was apparent. But basically, just beware. So we had this bearish divergence here on the 6-hour, and then sure enough, what happened in the following time, boom, we had this massive drop to the tune of, what was that? It was like an 18% drop in like a matter of hours, but I remember this was the biggest one, and that was like in like 10 minutes or something. 18% in a couple hours. But this one I remember was quite fascinating because we dropped 12% in like 10 minutes. So it's par for the course with this asset. So if you aren't setting your stops into these ATR levels up here, for example, if you aren't using super trends and stuff for your stop loss and just hoping you can eyeball it, sometimes your eyeball is not quick enough to gauge this type of reaction. So look out for this type of manipulation to the longs. We did talk about all of that liquidity below. You know, look at all that. $21 billion just sitting there. Good. Finger licking good. You know, especially when everyone's caught. And even yesterday, there was some take profit manipulation at the 42K region, and it caused a lot of alts to burp. And I remember people complaining. They were like, what happened to Matic? What happened to this? And they were like, I was looking at Matic, at this other thing, because Matic just took a nosedive at the trap door. We call the 706 here the trap door because that's where, if there's too many over leveraged players, they will drop it like a rock. And so they did that to Matic yesterday. So a lot of the alts experienced a take profit drop on the people eagerly getting in after the Bitcoin rise. So you got to watch out for that trap door, possibly holding or not, and that's where you set your stops into profit. But from our entry zone, what we were talking about from the live stream was here at 81.34, and it came up to that 3% mark, and you always should reward yourself in profito about it. But yeah, going back to the chat, let's see. It's been all right, brother. Yeah, man, doing good. How about you? Doing good. Same shit, different day. Yeah, I feel you. Yep, for sure. Having my smoothie right now. Bananas have potassium that keep your heart strong, so good thing to stay bananaed up. And peanut butter will keep that hunger away, so you don't need to eat so much all day. If you were at the end of the world, I would stock up on peanut butter. It keeps really well too. So yeah, that's what I'm seeing for Bitcoin. You got 1, 2, 3 hits to the high. What does it do at this fair value gap here? Do you have some acceleration into the longs here or not? So somebody just shorting without confirmation, like just seeing a signal here and shorting it, is not the way we use these signals. You use them as like, okay, time to start setting up shop kind of, and looking for these type of other confluences of higher probabilities to see what it will do. So that's why yesterday I was not giving out any ideas. I was just like, let the dust settle, let the chips fall where they may, and see what's going on. Speaking of chips fall where they may, did you guys see that Elon Musk advertiser video? If not, you should. It's kind of interesting to watch him lay into some of the advertisers these days. Not sure how you feel about that politically, but I do agree people's perception of good and doing good are two different things, and people are obsessed with appearances, which is unfortunate. So what do you want to look at while you have me? What's crack-a-lacking for you? What do you want to see? Total also seeing this nuke as we approach into exhausted territory. The total 3 as well. The Bitcoin dominance, we are getting a bit of a push up here, as the USDT dominance also having rocket ships. And yeah, so that is what we're seeing. This kind of crashing down a little bit further in an angle here. Anything you want to look at? Let's see. H bar. Nice. Let's take a look at H bar. The kind of corporate owned Hedera hash graph, which attempts to they say they have these nodes and this technology, but then they're not forthright with how that is being monitored and stuff. I'm a bit in my initial research, I was gung-ho about it, but the deeper I looked, the more I was like, wait, is this like a corporate owned thingy? Yeah, so, but you have these rocket ships that took off on the daily. We're now getting a nuke on the other end of the spectrum here on H bar. We came back. This is your cup and handle idea. Where do you come? There's some wicks here to reclaim up in this region. Let's go look at the liquidity on that for you. Hedera hash graph, H bar. H. Oh, there it is. Beep, beep. So they just wrecked all of the shorts here, and now you have a imbalance to the tune of 26 million. Notice the number being slightly less because it is a lower volume asset, so easily manipulated by the exchanges to just go grab free money sitting up here for the people situated in the shorts. And likewise with the longs, when the time is right, they can just beep, grab all the longs they want, grab all the shorts they want. Volatility, yes. Highly manipulated, yes. And sometimes hard to read as a result, yes. But as it stands right now, you have $26.48 million in long liquidity imbalance on the minute time frame for that. Small little longs opening up here and there, 50K, 40K, 80K as they go up here, taking the larger pools up here, the 50K targets, and some more shorts opening up as we speak. And let's go into that in detail here. The daily time frame still taking off here, and if we go to the 12-hour, here's where the trend-based fibs could have served you back here. So if you were looking at it from back here, you would have been able to be like, we went up to here, then we came down to here, and we held that 236/cloud over here. So where are we slated to go? And you would have seen we came up to that 2 level. We came back down into this golden pocket, order block, whatever you want to call it. And then we're kind of coming back up again to these levels. And that is how you use the trend-based fib projection tool from the impulse retrace idea here. Now, if you want to use just a regular retracement tool, you can just use this as a narrative building structure too. You can go to your basic here, and the 236 is your entry model. So you have a 236 green entry coming up to these golden pocket regions in the 0.5618, which we're at now, and we're coming possibly to a 706 trapdoor region. This 706 trapdoor opened up here on Sunday as they came up to that 66 or that 6 cent mark, 669, and then they dropped down because that's why they call it the trapdoor. And they did it once and twice. And so if we come up to this trapdoor again, do we have the strength to go higher than the trapdoor, or are we going to get that third hit to that region? Because you have one hit here, a second hit here, and your third hit possibly coming here. So power of threes is a thing. Look into it. Google's your friend. You can see if we are going to hit a third time up here and what that reaction to the trapdoor will be. If not, the 786 is a deep retrace, which people like to use. And let's go deeper. So you have the cross-up event of the 12-hour playing out right now. This is alertable cross-up events. You can watch the candles close above the baselines and use those as your guide. This is why Momentum Master's motto, be your own guru. You don't need me. You just need these tools in your disposal kit, and you can do work wonders. The 6-hour cross-up event had you at hello down here on Friday, December 1st. So we're already seeing this cross-up event of the 6-hour. We broke the super trend on the 6-hour. The cloud is kind of thinning in a manner here. It could be we got that bounce off the cloud here on the 6-hour time frame. The play is already playing out. If you're already in the trade, this is what I'm talking to you for, so you can monitor what's going on. It gets more chaotic the lower the time frame we go, but there's scalpers that could be using this. I use it on NASDAQ futures, so it's useful to me to see all this stuff, but it's all relative, right? If I zoom in, it doesn't get as chaotic, right? You're looking at hours zoomed in. Okay, so the hourly time frame basically had these 6 time frames oversold back here on Friday, and then we started to bounce out from there. We faded off of the cloud a little bit, managed to hold it and cross up the baseline, and saw this surge up to the 618 of that retrace. Got sold off at the 618, rebought back up. Now we're coming to the 65, possibly to that 706, 786 level for that third hit to the high. So if we come to the 15-minute here, 15-minute tapering out here, the MACD, leading MACD starting to cross down, flashing that cross down idea soon, and getting this nuke yet again across all the time frames. Do we see this third hit to the high? That is the question. Now for Hedera hash graph, you are getting kind of exhausted on all accounts. People are looking to offload or trim their things into profit, as a good trader should be, and they would be looking to wait to reposition after the dust settles. This is the 706 trapdoor, once, twice, 3 times a charm, who knows. And so watching to see how this reacts at that 669 region, 69 region. So if you look at that, there's not really much more to see up in this liquidity range. Majority resting down below. So yeah, that is what I'm seeing for Hedera hash graph as of this moment in time. And so you could use the trend-based fibs, and you can use the regular fib retracements. Technically we're still in a range here, so you can use just this regular retracement, and within this, digging your way out of the trench idea with the 236 as your guide for entry, and the 706, 786 take profit idea. This is your discount versus premium range. So you have basically above the 0.5 is premium. So everything above this pool is essentially premium price, right? Whoops. Border? No, I'm looking at the inside, the background. So everything above this is like premium. And then everything below the 0.5 is your discount range. This is basic economics, but essentially you look at everything on discount and premium. So we're at a premium price, so you'd be looking to set up potentially for a short idea based on that theory. And I think that was the basic one I had there. Was that green? I think it was. Either way, yeah. Hopefully that answered the question of Hedera hash graph. And I'd be looking to see how this 6 hour closes in 4 hours and 50 minutes. Does it tap up into this order block, bearish order block idea here or not? And Let's go see what else is there. Nice. Caspa. Yeah, no worries. XC. Caspa having a large basic play to the upside here. Let's go ahead and look at the daily and start everything going strong. There was a nice little rocket ship there in May. It's just been straight trending to the upside ever since it came out in September. It's amazing. So everything's basically price disco. There's nothing to really compare to other than if we go, this is how I also measure fatigue when there's price disco, is you can use the trend-based fib extensions for that. So from this impulse retrace idea, from this clear impulse and clear retrace on the daily, it gives you some information, right? So this 1382 level is where we butted our heads against twice. This is some take profit regions, the golden pocket, if you will, for the trend-based fib theory. And we burst up into the 786, held it, and then went right to that level. And then we came back into this area for an order block, came back up, held the one, and then continued higher back into this region. I'd be considering taking profits if I were in a trade here and be looking to see a retrace, because you are getting that kind of M-like structure here, this double top idea. If we look at the cross down of the daily, it is already crossed down and the baselines are suppressing the price, as you see here. If we look at the 3-day still open pretty wide, but that could change in the next 22 hours as it comes down here. It's seen a nice run, and it's probably trapping some people in this idea to enter into a trade. Let's see if CAS is on here. I doubt it, because it looks like it's just on MEXC. No, it's not. So yeah, I would be looking to try to find a re-entry off of some of sweeping these 6-5 regions and whatnot, but I'm kind of frugal like that. I don't play the aggressive breakout ideas. And the 12-hour cloud is also starting to thin here in a manner, suggesting that the volume is tapering even though we are drifting higher. You're seeing some volume enter here, but the overall money flow is above the RSI, suggesting that you could be coming a bit lower here. You could do a trend-based fib on the other side of the equation only if it is lower highs. So currently we have a lower high, so we can go like this, down to here, up to here, to this wick. I use wicks because the price actually did go there, so you can't discount it. And so, and short entry or a level of where you would start to see some bearishness would be at this 236 at 14 cents. So right here at that 14,738 region, do we see some sort of breakdown on the cloud there? This would mean that you would come lower here, maybe hit that cloud, and then potentially accelerate to the 0.1. The one level of this bearish trend-based fib lines up with the 0.65, so that would be a nice little reactionary zone here at 11 cents. And possibly get a little bounce after sweeping all of these lows. So you look at all these lows too, what are they grabbing here? They're grabbing all the stops for these longs that are expecting higher prices. But what do I know? I know nothing, and I'm just looking at the math here because there's nothing to look at to the left. So you can use these trend-based fibs as projection tools for where price wants to fatigue and take profit at. And yeah, that's what I'm seeing for Caspa, because you have the 12-hour overbought here. You also have some higher time frame fatigue by the looks of it on the weekly 6 hour. 6 hour is coming down here in a manner here. If you look at the 4 hour here, also ambiguous, not really clear. Still holding the cloud, and we flipped the super trend. Got to do my own diligence on the lower time frames here, the hourly. Hourly time frame getting kind of overbought without really making it above the high. We'll see how that reacts on this level. Once again, 236 at 14 cents even. So seeing this drop beneath that would be your confirmation. It needs to go beneath this 14-cent mark for this to be bearish. So basically this level we're at currently, if we drop beneath it, then you could be seeing what I said come to fruition. No guarantees in life or trading, but looking where these levels line up makes sense to me down at that 6.5 level. Yeah, that's Caspa. Anything else? Yo, thanks, Steven. Creo engine, okay. Interesting. So yeah, let's wrap it up in a nutshell and bid you guys adieu, shall we? So we were looking at a potential retrace idea and the triple hit to the high. We'll see if it goes up to this wick one more time, fills that fair value gap idea or not, and then eventually heading down to kiss the cloud and or grab some liquidity in that 40,005 region or not. So ultimately we saw everything do its thing on Monday. So what is Tuesday's, Wednesday's play? Generally there are cases where Monday and Tuesday and Wednesday line up. A lot of times, more often than not, Tuesday and Wednesday do the opposite of what Monday did, and Monday sets it up for Tuesday and Wednesday, and then Thursday's the midweek reversal of that. But we will see. So basically coming down is the pressure of coming down is more what we are thinking here, coming to these regions. But I would like to see it kind of bounce up for one last fake out to the shorts first, and then potentially come down to here. And that is my story, and I'm sticking to it today, folks. So I thank you for your time. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun